What's up, everyone? It's Karthik with Moneyvest. Welcome on board for our Moneyvest Market Open live stream. And today is a very, very special day, as you can probably tell from the title and the thumbnail, because today is February 4th, 2026. And we have now officially completed 5 full years of doing this, of our community. We have completed 5 full years because 2021, I remember this day as it was yesterday, is when I moved back from the US back to India to pursue Moneyvest, to essentially go after this crazy idea of making this into something bigger. And long and behold, 5 years later, I look back to that very moment every single year, and how grateful and blessed I am to have each and every one of you as part of the community. It's been truly an amazing journey. Of course, full of challenges, full of ups and downs of its own. But every moment has been truly, truly worth it. I would not trade it for anything else ever. And there's been happy moments, sad moments, frustrating moments over the last 5 years. And it has actually felt like a complete blur, because it's been very, very fast. I mean, things have moved so fast because we've been so busy with everything. And I remember back then when I was leaving, I booked a one-way flight. President Trump was still in office. And then we went through the entire, Biden era, and then now we're back with the Trump in the office. But yeah, crazy times. And thank you so much for joining, everyone. And yes, congratulations to all of you as well, because we have now completed 5 full years. No, I wasn't in Chicago in the US. I was actually in Boston, but I booked my flight through Chicago. So Boston to Chicago, and then Chicago back to India. So I'll still remember that day sitting at the Chicago airport, thinking it's my last day in the US. And yeah, just told myself that this is it. Gotta make this work. And yeah, absolutely crazy times, and just very grateful, to be honest, very grateful, very blessed for each and every one of you who's been part of the community for such a long time. A lot of members have joined us in the last year, 2 years, 3 years, but I know a lot of members, like more than 50%, more than half of the members are from 4 years ago. So that just is pure dedication and true commitment from all of you. And really, that's what I posted in the Discord as well, is despite all the ups and downs and all the challenges and everything, that one thing that stood firm is the commitment, our commitment to show up every day, our commitment to continue to help each other, our commitment to grow together, and our commitment to consistency and discipline, because those are the traits that are intangible traits that are going to create longevity, right? We're not here for the spur of the moment. We're not here for the hype. We're not here for just being here for a short few months, but we are here to build something truly special, to actually create a legacy and leave our mark. That's what the Moneyvest community is all about, is that we want to be here for the long term. Like even 50 years, 100 years from now, it should still live on. It should still outlive us. That really is the true goal, is to keep passing on that knowledge to our kids and their kids' generation. Because that's one of the hardest things is, we were having this discussion, as I said yesterday. I had a very good reading session, a book club that I'm a part of, and we were talking about money, right? Money was a big topic. And one of the very interesting questions that came up, it was actually very interesting. We had a good debate and a discussion on it. Is inherited funds a blessing or a burden? That was a question, okay? Very interesting question. And to which I essentially responded that the most important thing is principles and values and strategies. Like if those are the things that you can pass over to the next person, whether it's a friend or a family member or your kids, if you can pass that over, then you know that your legacy and your money is going to live on. It doesn't matter, if it's 100,000 or 100 million or 100 billion, right? Inherited funds can be a blessing if with the funds comes the principles, the values, the strategies, the value of hard work, compromise, the intangible skills, right? Those are the hard things that one needs to pass over. Otherwise, it can be the biggest burden. the biggest burden. And I was reading a book, like I said, The Art of Spending Money by Morgan Housel. And in that book, they talk about the Vanderbilts, right? The Vanderbilts family. And they had one of the biggest fortunes in America in the 1800s, $300 billion. And guess what? Over the course of the last 200 years, they lost it all. Their kids and the kids, grandkids, everybody eventually just ended up losing it all. Why? Because there wasn't any principles or values passed over. So that's the main goal for Moneyvest, is not only for us to identify, okay, great opportunities, great investments, we want to grow together, we want to grow our portfolios, get great returns, but at the same time, we want to pass over our knowledge to the next generation, to also people around us. That's how knowledge compounds. If 1,000 people in our community have a good idea about money and finance and investing, and they tell another 1,000 people, that's how you compound, and that's how everyone gets more and more educated financially. So that's the goal. That's the 100% goal that we're working towards, is financial education, getting more people towards financial freedom, independence, and life of freedom, basically. Living as you want, doing what you want. That is the true goal of Moneyvest. So there you go. A little bit of a couple minutes that I wanted to go over. Again, thank you so much for being here, and huge congratulations to all of you as well, because it's not just my accomplishment, it's everybody's. It's a collective community accomplishment. So thank you so much. And let's talk about stocks. Let's dive right in. So let's do a Q&A for the next 30 minutes. Any questions, specific stocks, I am more than happy to go over. Which was the first ever stock you bought? The first ever stock I ever bought was actually an ETF. I remember I started my account back when I was 18 years old, a Vanguard account. I put $3,000 into a ETF. That was my first ever experience with investing. And then once I started going to school, I made every mistake in the book, investing in the wrong stocks, penny stocks, trying to get rich quick, lost a lot of money, and then eventually learned the right way of studying companies, doing a lot of equity research, going to school for finance, learning about fundamental analysis, and then learning about options trading, and then learning about a lot of different ways of investing in different strategies. So yeah, did all of that. Okay, yes, money plus the right mindset. Mindset, principles, values, the intangibles, that is really where true legacy lives on. Everybody is passing over money, but not everyone is passing over principles and values. And I think that's really what's most important. Stefan, thank you so much. Nice talking, Karthik. You are doing such good. Everybody is doing great. And again, this is a collective effort. I really want to acknowledge our team, our community. Everyone is involved in this process. And so really want to convey my appreciation and gratitude towards everyone. 5 years already, huh? Feels like yesterday. I know, Milan. It's crazy. It's absolutely wild how time is flying. And that's why I think it's important to take a step back to actually enjoy these moments as well, because every day we're coming in live, we're talking about stocks, there's so much going on, so much uncertainty, but sometimes it's really important to just take a couple minutes to relax and breathe and enjoy the moment. So important to really have that slow start to the day and some moments of slowness. I think it's really important. Okay, let's see some questions here. SoFi, please. I'm light buying at these levels, Rick. So let's take a look. I think a lot of stocks obviously have been selling off, as discussed in my yesterday's video. Tech, more specifically, tech, software, artificial intelligence. A lot of those companies, semiconductors, they've all been selling off. And support level for SoFi is going to be in the 20s. So Rick, if you are considering picking up, I would say like $20 is a good level to look forward to if it continues to slide further. So $20 is going to be that next support for SoFi. So Enphase, let's take a quick look. It is rebounding up over 26%, 25% right now is where we're at. And some of the big movers for today, we've got AMD dropping on earnings, but Enphase is pushing higher. Let's take a quick look. Enphase gained 23% after solar energy company posted better than expected adjusted earnings in the fourth quarter and said it anticipates first quarter revenue of $270 to $300 million, beating expectations of $262 million. So earnings is one of the big reasons why it's rallying here. Double beat and a guidance raise is why Enphase is back up to almost $47. We got 47, so right now we're coming up to this resistance at the moment, and support level now for Enphase is going to stay roughly around here at around $43 to $44 for end phase. So that's going to be that support resistance all the way up to $46, $47. SMCI analysis would be awesome. They just got earnings. So let's take a quick look here. Super Microcomputers, they also came in with a double beat. They're up over 9% in pre-market at the moment. Let's just quickly break down the earnings themselves, and let's see. So Super Micro jumped 9.8% after the company raised its annual revenue forecast on sustained demand for its AI optimized servers as companies ramp up data center capacity. And strong earnings support the market's valuation. And what we've seen is that the earnings growth has broadened across more sectors than just technology, is what Sean Clark said at Clark Capital. So pushing higher, nice little jump there after the earnings came out. Resistance is going to now stay put at 33.34. So that is the resistance. Support level stays put exactly where it was prior to the earnings at $28, $29. So pushing up almost 9%. Okay, general question. Do you think software SaaS is dead? I don't think so. I don't think it's dead. I think there's always going to be need for software. Yeah, it depends on the context, right? What kind of software are we talking about here? And how general is this question? Are we talking about very specific niche sectors or just broad software in general? I know that software companies have been struggling. So if you come over to our heat map, so market snapshot, if you take a look at this sector right here, software application, look at this, right? Absolutely red. You got Salesforce, Uber, AppLovin, Intuit, ServiceNow, Cadence Design Systems, Autodesk, Workday. A lot of these companies is absolutely getting crushed. IBM was down. We got Accenture selling off down over 9.5%. Pfizer V, we got IT. A lot of these companies just absolutely getting crushed. So software, yes. Yesterday was brutal. But I don't think that it's dead, to answer your question. Congratulations. Thank you so much, Yogesh. I really appreciate that. Or Yogi. At what point of time would you consider building a dividend portfolio? Dividend portfolio is primarily for income purposes, right? So that's really why people build a dividend portfolio, is because they want to collect dividend, while doing, So that's why they build a dividend portfolio, right? Is to actually collect some income along the way. And there isn't a right or a wrong time. It's just what your objectives are is what should dictate your strategy, right? So objective should dictate your strategy in investing. If your goal is to grow your capital, the dividend portfolio isn't going to meet that objective. But if your goal is to generate some income, then a dividend portfolio can be the right approach. But then again, on a dividend portfolio, you're looking at 4 to 5% dividend yield on some of the blue chip companies. But then if you go higher yield, what also goes up? It's a trivia question. It's a quick quiz question that I want to ask everyone. If you are aiming for a higher yield on dividend stocks, what is more likely to also go up with the yield? Let's see who gets this right. I'm going to ask a lot of questions. Yes, so Nameless says risk. Correct. So risk also goes up the higher you go out the curve on yield. So that's why junk bonds give you like 15, 20%, and treasury bonds give you 4%, right? So there's a huge difference. Why? Because junk bonds are junk. They are backed by companies that don't have great credit, versus the treasury bonds are backed by the full faith of the US government, which again, arguably you can debate this, it's backed by the full faith and the credit of the US government. So that's why low risk, low yield, high risk, high yield. And so dividend portfolio, you can build it for different kind of themes, different kind of yields, different kind of risk exposure. But for me personally, I feel if you are going to be focusing on income, I do think that real estate can be a much better accelerator for generating income, plus a little bit of appreciation potential, plus the factor of leverage. So you can scale with leverage and also generate good cash flow north of 6, 7, 8%, depending on the market that you're investing in and the pricing that you're getting, plus scalability, leverage, all of that factors, and plus the appreciation potential is strong. So yeah, dividend portfolio can be for a lot of people, but just depends on your objective and your strategy. Okay, let's see. How should we think about investing in cybersecurity stocks, especially since their valuations are so high? I think CIBR, that's a good question. I think CIBR is a good starting point for cybersecurity. I think this is an ETF that is very similar to SMH. Gives exposure to cybersecurity companies like Palo Alto, Zscaler, CrowdStrike, all those. And it's coming down to its higher low. So this is the entire uptrend for CIBR, and you can see that it's been getting bounced off of this dip every single time. So every time it gets down there, it's been pushing higher. So we're back down to that support. If it continues to break down further, we're going to be looking at $59, close to $60 for CIBR. So that right there is going to be that resistance, that support to watch for CIBR. I think that's a good way to start until we see more cybersecurity companies and stocks come down to better valuations. Why is Micron stock down in the last 2 sessions? Let's take a look at Micron here. I wouldn't call this necessarily being down. I think it's more or less flat than anything else. I mean, it's also been running, right? It's crazy how high it's gotten up to, and it's incredibly overbought. Yeah, it's very overbought. Weekly chart looks like crazy parabolic, and it's not necessarily down. I mean, yes, it's down 4%. It's down 2% pre-market. But what would you expect, right? The stock's also gone up since December. It's up over 100%. So I think a normal pullback is very, very, very acceptable. Okay, good time to buy Netflix and Hood. And let's take a look at CrowdStrike. So CrowdStrike is also part of the shopping list. Very similar to CIBR. It's been selling off as well from its highs of 560s, down 26%, looking at that support at $398, close to $400. So this right here is going to be that support level to watch. Similar to Broadcom, I am planning on picking up cybersecurity companies as well, right? So whether that's CrowdStrike, Fortinet, Zscaler, Palo Alto, or CIBR, as I mentioned before, I do want exposure in cybersecurity as well. And so the plan would be to pick up some shares of cybersecurity companies. So that is where we are in terms of that support level right there for cybersecurity. So the plan is to pick up some of these stocks or either the entire ETF itself. So good time to buy Netflix. So Netflix also tumbling down. It's essentially flat right now, but support level next is going to be down to $74. My $85 calls are going to expire next Friday, which I think are up close to 40-50%. I have to check. I will most likely close them and open new ones at close to $80 strike, very close to the money. But next support is going to be down to $74. And Netflix, I think, has come down to some very attractive value here. And it is not unusual for us to see Netflix go down 40, 50, 60%. It's happened before. I'm not shocked or I'm not surprised that it's down another 40% from all-time highs. This is very normal for Netflix. It's happened before and it's happening again. Okay, Robinhood as well. Robinhood's also been selling off a little bit more recently, down over 3%, down another 2% in pre-market. I think $67 is going to be that support level to watch. But after the earnings, I'm going to update my fair value. Definitely do check out the fair value analysis on individual stocks as well. I did a Palantir update yesterday. So did a video on Palantir. I see that there's another question about Palantir. So Maze, definitely do check out the Palantir update yesterday that I posted. I also did a video on SoFi. Get a couple guys asking about SoFi. So definitely do check out those videos because those are the most latest updated views on these companies. And they're also updated with the fair value. So I'm updating my intrinsic value based on very conservative growth rates. So they're always, lower, 20, 30, 40% lower from all-time highs for a reason. Because at the end of the day, I really want good deals. I want to invest at great prices. And I want to be as realistic and as conservative as possible with my expectations. Because if my expectations are down here and the reality is all the way up here, that's good, right? If they actually end up performing better than where my expectations are, that's always a good thing. I'm always pleasantly surprised. But if I always keep my expectations up here and the reality is down here, then I'm always just preparing myself for disappointment. I'm always already, positioning myself for disappointment long term. So I always want to go in with very low expectations, very conservative expectations that, okay, this is a very realistic, conservative analyst estimates. And if they come in higher than that, that's great. That's the cherry on top. And it's the same thing with real estate as well, right? If I'm underwriting a deal, I'm looking at very conservative yield, 7-8%. I'm not even factoring in appreciation. Like, I don't even know what to speculate on appreciation, where the prices will be 2 years, 3 years, 5 years from now. As long as I can get good yield today, it makes a good deal. If it doesn't, lower the price, better the deal, better the risk reward. So that in a nutshell is how I sort of think about, looking at all these different stocks and different asset classes, is from a lens of conservative expectations there. What about Oracle? So Oracle, is it a good time to buy Leaps? So Leaps, again, run through the calculator. We've got a Leap calculator that essentially tells you whether Leaps even make sense or they don't, because there's a factor of intrinsic and extrinsic value. And then also, what is the cost of buying a Leap versus 100 shares of the shares itself? And right now, I would say Oracle is coming down to some very attractive levels here. So 151, 152, very, very oversold. This is a very strong support here. And we've got another support all the way down to as low as 120. Oracle is down over 50% from its all-time highs from back in September of last year. It's down over 55% now. I think the valuations come down to some very attractive levels. I mean, if you take a look, simple calculations, if you look at earnings for this year, $7.90, call it $8, and it's trading at 154. What are we looking at on a forward basis? 154 divided by 8, under 20 times earnings. So yeah, this is a stock that's come down to some very attractive levels here. If you take a look at Q1 25, 52 times earnings, and then 38, then 30, and now under 20 is the earnings multiple. So Oracle, I think, is very attractively priced. Rini, thank you so much. Congrats on the 5 years, Karthik. Thank you so much. Congratulations to you too. I believe you've been part of the community, part of the member for almost 5 years now. So speaking of debt, what about Adobe? Let's take a look at Adobe and PayPal. I know I've been getting a lot of questions on PayPal over the last 24 to 48 hours, but Adobe also down over 7%, selling off further 1.5%. I've been talking about Adobe for a long time, and I've already expressed my concerns and my opinions on Adobe for a long time. I think we covered this on almost every live stream. And as a consumer, I just did not like Adobe's practices, pricing strategies in general, and then also the innovation and the substitutes and alternatives that were available out there. So I think those could be some of the factors why Adobe stock is just not performing, even though the revenue seems to be quite reasonably good. Margins are strong, 28 to 30%. It's been rather stable, but I think the growth expectations are starting to slow down a little bit. Still growing, but a bit more linear growth. And on a valuation basis, yes, it's come down to some pretty attractive levels. I mean, there's a lot of companies that's come down to like some very attractive valuations. I mean, PayPal, for example, if you come back to PayPal, down over 20% yesterday. It's trading at $41. And if you take a look at 2026 earnings, what are we looking at for earnings? $5.47. Oh my God, it's less than 10. $42, let's call it 42, divided by 550. Oh my God, it's under 8 times earnings. It's under 8 times earnings and under 2 times sales. This is like crazy value. At this point, it starts, I mean, we might even look at net liquidation value, like at this point. We might even look at, okay, what does a liquidated value look like for PayPal? Like if it were to liquidate completely, what would that look like? Well, I might do some analysis on that because I think it might be very, very interesting for us to look at. Because we have to look at, so we have a net liquidation value calculator on our website, on our platform. And what we like to do is we like to look at the recovery rate for all their assets and then also plug in all their liabilities. So right now their total assets are 80 billion. Their total liabilities are about 60 billion. So what we have to do is we have to figure out, okay, how much of their cash and cash equivalents, 10.4 billion, that's exactly 100% recoverable. Receivables, right? Accounts receivable, that's a lot, 47.5 billion. How much of that receivable is going to be recovered? So that recovery amount is plugged in over there. It's a little bit of a different way of calculating the value of the business. This is actually a very deep discounted model because this is exactly what Buffett has used in the past, even Benjamin Graham have used in the past to value the business. Because if a stock is trading below its net liquidation value, that is the true no-brainer price that you want to pay. Because at that point, it's like saying that a $100 bill is trading at $80. Like, that's what it means. Like, if a stock is trading below its net liquidation value. Because if you were to liquidate the entire business today, pay off all its debts, what is left over is the value, and the stock is trading below that value. That's how crazy that market forces can get down to. That's an overreaction. That's clearly an overreaction. So, but I'll have to check for what PayPal net liquidation value is, because we'll have to come in with a recovery rate for all these assets. Because if I put in 100%, right? Let's say 100, 100, 100, 100, 100, 100, 100, 100, and 100, and this also 100. Just give me 1 second. I've got a call coming. Yeah, sorry about that. So if you put 100, so that's $80 billion, and then liabilities are about 60 billion. So net liquidation, value comes in at 2165. Okay. So just to give you a little bit of perspective on what that actually means, that means that if all of the assets for PayPal were recovered at 100%, meaning their cash, obviously 100%, because that's cash and marketable securities on the balance sheet. If they are able to collect all their receivables, accounts receivables, 100%, they're able to collect from all their creditors. And then other current assets, 1.8 billion, long-term investments, 4.3 billion, property, plant, and equipment for whatever it's worth. They're able to get 1.7 billion, which is the asset value right now on the balance sheet. Goodwill is a lot, right? Goodwill is some acquisitions PayPal's done, intangible assets, patents, trademarks, IP, 10.86 billion. So that I think is the biggest challenge there, because usually I put this at around 20 to 30% recoverable, because who's going to buy, right? I mean, if PayPal itself is getting sold as a business or going under, then who's going to be buying that goodwill? But I've kept it 100% just for the example's sake. And then intangible assets, 208 million. Other long-term investments, we got total assets at 80 billion. So 80 billion is the asset value. Liabilities, total liabilities are 60 billion. So after the assets are paying off all the liabilities, the net liquidation value is at 2165. So what does that mean? That means if PayPal drops another 50% from here, goes from 42 to 21, it would be trading at book value. It would literally be trading on its book value. And that I would buy it at 2165 in a heartbeat. I would be like, okay, just give me as many shares as possible at $21. Because then you're just buying the asset value of the business. But we have to also price in the goodwill. How much of that is recoverable from the goodwill part? So yeah, that is something to keep in mind, because since the prices come down so low, I think it makes sense for us to start looking into this, because 2165 is I know it's still 50% from where PayPal is right now, but it's closer to PayPal is closer to 2165 than it is to where it was 2 weeks ago. So we're not that far off. Okay, a little bit of a longer answer on PayPal, but good morning, Jose from Brooklyn. Congratulations on your 5 years of great work of keeping up thank you for all your hard work, and could you please let me know what you think on Team? Thank you so much, Jose. I really appreciate it, and congratulations to you too. Let's take a look at Team. So Atlassian has also been pulling back on a week after week basis here after the falling wedge and this downtrending triangle, and breaking down from this area of support even further. And I would say the next support is going to be down to this level at 97 to as much as $66 for Atlassian. So those are going to be two support levels to watch. And I think valuations have also come down under 5.5 times sales and a little bit under 20 times cash flow for the business right now. Rafi, we got a few more members here. Okay, let's see. Congratulations for the first milestone, Nikunj. Thank you so much. Really appreciate it. Happy anniversary, my friend. Best investing channel on the internet. Thank you so much. It's been 5 years already. Mom, we're going to what is that? Kinder? The hustler here. Congrats. Thank you so much. Congratulations, Caddy. Nice to be following you since year one. You always have great videos and always ready to help. Anyone who needs help anytime, thank you for your time and for care for us. Thank you so much. Really appreciate it. And Dave, thank you so much. Happy 5 years, Karthik. And again, guys, it's congratulations to all of you, right? It's not just my effort. It's a collective effort. And right back at you. So whatever you guys are saying, I'm just going to say right back at you to all of you. Happy 5 years. Not only have I gained so much knowledge and skills being part of the community, but I've also gained a wonderful friend in you. Cheers to the next 5 years. Yes, you definitely have a friend in me, for sure. All of you guys. I think that's really what it is. And that's why if you ever make it out to Dubai, you've got a place to stay, I'll drive you around, I'll show you all the nice places, I'll make your itinerary for you, and I'll plan everything. It doesn't matter what time of the year, if I'm here, if you're coming, and you've been part of the Moneyvest community member for a long time, all on me. We'll take good care of you and your family, whoever's traveling with you. So, okay, thank you so much. I really appreciate it. Love from India. Where are you guys joining from? I really want to know what part of the world are you tuning in from today for our live stream, so that I can quickly record this and put it up for our story. So what part of the world are you joining from? No way you're joining from Dubai. Are you? Where in Dubai are you joining from? So tell me exactly where you guys are joining from for our 5-year anniversary of the Moneyvest community. So you got Dubai in the house, you got Portugal, London, South Carolina, got Los Angeles, Canada, Singapore, Long Island, amazing. We got St. Augustine, we got Canada, Honolulu, we got Central Florida, South Africa, JBR, Dubai, amazing. That's great. Then we've got North Carolina again, we got Pennsylvania, Charlotte, Australia, Armenia, love it. We got India, Florida, Austin, Texas. Lots of people from the sunny side of Florida. I love it. I love Florida, by the way. I really want to go. Again, spend more time. China, Houston, Texas, Dominican Republic. Amazing. Okay. Market's about to open in a few minutes. Let's talk about AMD as well. Let's talk about the earnings and what they reported, because AMD is indeed selling off quite aggressively. Let me just open up AMD's earnings. So AMD Investor Relations will go over to this link right here, reporting fourth quarter and full year 2025 results. So on a GAAP basis, year over year, the company saw revenues up 34% and net income up 213%. So 1.5 billion is what they reported. And then if you're looking at non-GAAP numbers, up 42% year over year, and revenue was up 34% year over year. On an annual basis, let's take a look at net income, $6.8 billion, up 26% on a year-over-year basis, and revenues were up 34%, so up 34% to $34.6 billion. So if you do some very simple math on a trailing basis, AMD, given that it's down almost 10% in pre-market, so we're just going to shave off, 394 is where it's at. I'm just going to do like 0.9. 354. So let's say that it's going to open around 355 market cap, so 355 billion. Divided by 34, we're looking at 10.5 times sales and just over 52 times trailing earnings, right? Trailing earnings is going to be that number. Let's take a look at their guidance. So outlook, AMD's outlook are based on current expectations. So 9.8 billion is what they guided for in the first quarter of 2026. Plus minus 300 million. I think that's one of the big reasons why the stock sold off, because expectations were a little bit higher. Even though they were not, they beat expectations, but that's Wall Street for you. Approximately $100 million of AMD Instinct MI308 sales to China. So the midpoint of the revenue range represents year-over-year growth approximately 32% or year-over-year, right? So if you were to plug in, let's say, another 30% growth in revenue, and what are the margins we're working with? So I'm just doing some very rough math. 6,831 divided by 34, 639. We're looking at almost a 20% net income margin for the company. So 34, 639, that's the revenue. multiplied by, let's say, 30% growth in 2026, that comes up to over $45 billion of revenue. So top line, 2026, AMD expected at $45 billion, multiplied by 20% non-GAAP net income margin, puts us as a $9 billion of net income. So $9 billion bottom line profit. So $9 billion is the number, and we're opening in at 355 divided by 9, and we're looking at just under 40 times earnings for the business on a forward basis, 2026, and 9 divided by 6.8, the growth rate is going to be 32%. I think AMD is a pickup here. You're looking at a stock that is now trading at 40 times earnings, which is going to grow 2026 expected earnings at around 32%. Again, just some back of the envelope math here, but I think AMD is a bit of an oversold here because earnings growth on a non-GAAP basis are quite good. But us being us, Moneyvest wise, we want good deals, we want great prices. So coming over to the daily chart, the lower the better. Remember, the goal is to always pay 50 cents for a dollar, and 194 would be even better. So anything under $200, if it drops, let's see, from these levels, if it drops another 10%, then we're looking at 355 minus 35, looking at around 320 divided by 9 billion, we're looking at 35 times earnings. So at 194, AMD would be around 35 times earnings, which I think is quite good for AMD. And right now, if you come over to Advanced Micro Devices, we are looking at a fair value of 101. So this is obviously going to get updated. So I'll update this number. I'll do an AMD video, update it. So again, the entire shopping list is going to get updated after the earnings season. So you'll have the entire updated version with the new fair values, new buy targets, all of that updated once the earnings season fully wraps up. Because of course, we do still have quite a lot of companies reporting, especially the big one. NVIDIA still has to go and report their numbers. But yeah, fair value was 101. I think light buy 132 will certainly get upgraded to potentially get up to 150s. And then 170 or 194 is what I'm going to assume where the fair value would end up for AMD. Or not that much, but might be closer to that because we also have to price in the 10% margin of safety that I plug in for most stocks. So yeah, that's where we're going to be. Yeah, smash the like button, everyone. Thank you so much. And Caddy getting sentimental about his creation Moneyvest community, I can feel. Yeah, no, it's a good thing. It's a good thing. I think not sentimental, but just very grateful. And yes, I am quite emotional in those ways. So definitely want to enjoy it. What is the buy price for AMD? Good to buy at this price. So yeah, I just kind of went over it. Right now at 194, we'll be at 32, 33 times earnings. Right now, we're just under 40 times earnings for a stock that's expected to grow earnings by over 32%. So the PEG ratio is just a little bit over 1, but I think it's a good start. All right, everyone. So just give me 1 second. I'll be right back. All right, so I'm going to end the live stream here, everyone. Thank you so much for being here. And again, congratulations to everyone. We just completed 5 full years. And I'll see you all on the Discord. Again, link's going to be down below if you want to join and be a part of our community. Thank you so much.